Welcome to part 2 of the weekly market analysis for the week ended 3rd August 2012 by howtotradesafely.com. Please note that the legal disclaimer as mentioned in part 1 still applies and that this data is given for informational purposes only. In part 1, we looked at the sector summary and how the different indexes had moved over the past 1 week. This is the individual charts. The financial sector is currently sitting on support at the 20-week simple moving average. Is this the start of a breakout? The energy sector is on a 6-week uptrend, and it looks as if it might carry on. The material sector has been consolidating for the past few weeks. Is this ready for a breakout? What about the industrial sector? It moved up strongly the previous week, and this week it only moved up a little. There is a hanging man showing at the right-hand side of the graph. On the other hand, we must note that it was the bulls who closed the session, even though the bears were quite active on Wednesday and Thursday. Technology index really shot up this week. It was almost a gap up at the beginning of the week, and even though it went down a little, it ended up the week much higher. Consumer discretionary index, we are seeing support at about 44 and resistance at 45.8. Consumer staples, even though they went down during the week, the consumer staples actually reached an all-time high on Tuesday. The healthcare sector reached an all-time high previous week, Friday. This week it went down a little. The utilities reached an all-time high on Wednesday before dropping due to the FOMC and European Central Bank news. But the bulls closed the session and it recovered. This is the news the important news for the coming week. On Monday and Tuesday, the most important news is the speech by the Fed Chairman Bernanke. Wednesday, Thursday, and Friday, information is given here. This is my opinion for what's going to happen next week. I personally believe that the rally does not have a strong foundation. The markets rallied on non-farm payroll, but the non-farm payroll numbers are only a first estimate of the actual numbers. Furthermore, earnings releases from the big multinational companies so far indicate that sales in Europe and Asia are slowing, which is affecting their bottom lines. This means that the global economy as a whole is slowing. Having said that, it is not what I believe that is important, it is how the market behaves. By looking at the sectors with the best performances, the daily market analysis of Friday is showing a very positive bullish trend. This is a very good short-term sign, and I expect markets to carry on going up on Monday. The weekly market analysis is also definitely not bearish. 2 out of the 3 worst performing stocks are the defensive sectors, healthcare and utilities. So this is definitely not a bearish indication. However, the best performing stocks I would like to see in a bullish market are not performing as well as the mid-level stocks, which are neither bullish nor bearish. In fact, the best performing sector is technology, probably buoyed up by the action of Apple. I do not see any prominent scheduled news effects next week that will have a major impact on the market. With the good performing payroll numbers, Bernanke will have no reason to impose QE3 this month. But Wednesday's bond action will give us a better idea. Thursday's unemployment claims will move the markets, but probably not as much as the non-farm payrolls. And the federal budget balance on Friday is the sleeper. However, please read. This is my opinion. Thank you.